Good morning, traders. It is Monday, October the 21st. Taking a look at the charts, we've got the daily chart and our cycle analysis and projected price. And what's really interesting here is how the market moves. Now, most of us follow markets during regular trading hours, which is 9:30 to 4 p.m. Eastern Time. And when we look at the futures chart gives us the price of kind of all the price action. And what's really interesting is sometimes we get this divergence or this difference between what happens in regular trading hours and what happens in the 24-hour clock going around the world. And if we take a look at the price action, you can see the SP 500 here. This is the futures. We've got this downward sloping trend line in price. And what's interesting is if we look at the SPY ETF, we actually have an upward sloping trend line. Now, this has to do with the price ranges and dividends probably being paid out. But overall, it is kind of interesting that the futures are sloping down and the regular trading hours market is sloping up. And this is what the market loves to do. Actually, if we were to just go way back in time, what happens is the market likes to go up and make a nominal new high from in the past, and then we see a big bout of selling. And then the same thing happened here. The markets rallied all the way up. They broke to a nominal new high just by a little bit. We see another big bout of selling, and now the market is running and trying to move higher and likely going to push to another all-time high, break these previous highs by just a little bit, possibly this week, and then we could see another big bout of selling take place. And the market loves to do this during, this is regular trading hours, the ETF. And when the market hits new highs, it hits the media that all-time highs, people get extra bullish, they get more confident, they pile into the market only to see it sell off again. But this happens repeatedly, and because it always recovers in this bull market. People don't mind. They panic. A lot of times they'll get in, they'll get out, they get back in again. It's amazing how people trade sometimes or invest. But more or less, we're expecting a higher high based on the regular trading hours. It's going to hit the media, all-time highs for the equities markets, and then we could see some more selling take place. So it's going to be interesting to see how things play out. You can see our cycle projection showing that more or less this week we got 1, 2, 3, 4, 5 days. So this week we could see the market start to top out, and then it could start to roll over. We'll see how things unfold. Again, cycle analysis changes every week, every bar. Things do adjust. There's longer term cycles and shorter term cycles. Keep in mind when we look at this price action, we've got cycles that more or less are going like this. We've got longer term cycles that are consistent, and then we've got multiple smaller cycles that are obviously bouncing within here, and you get these lows, and of course that carries all the way forward. And there's multiple different cycles in here. There's even shorter term cycles at play, and there's even longer term cycles where we're seeing huge rounding tops formation and bigger patterns as well. So all this is blended in to give us this kind of bias, this price bias. It doesn't mean price is going to fall down to here. All it means is after this week, there's going to be a downward negative bias because longer term cycles have topped out, and we could see money start to flow down based on money flow and sentiment. This is what cycles are kind of pointing to going forward. For all we know, just to keep it clear, is that we are still in this giant range, and the market may only pull back and stay within this range and continue to do its thing for months. Who knows? We never know how far the market's going to go. That's why we follow these trends. We play the trends. A big breakout of these patterns will be significant, especially a break to the downside could be huge. We could see the December lows tested again. Maybe we test the December lows in December again, just like what we saw last year, a huge sell-off into December. Anyways, let's move on to the next market. Let's go over to bonds. They're down 0.5% today. Again, bonds still working through this larger formation. Again, bonds had a huge run up. Now they are consolidating, however you want to look at them. More or less, there's going to be a horizontal level, this giant sideways range as well. We'll see where things go. More or less, yes, last week we had the cycles showing that they're going to head up. Instead, they're starting to give way to a downward move, and we'll see if it goes back down and tests this other low. Again, we're not looking to be in bonds right now. So we're not really focusing there at this point. But overall, bonds are in this big sideways range, and we may look to get into a play sooner or later, but just not this week. Looking over at precious metals, the Brexit move. Actually, let's take a look at the currencies. Let's go to UUP ETF. UUP U.S. dollar. This mimics the U.S. dollar to some extent. More or less, it's down. It's down again today. You can't see today's price action yet, but Brexit, the vote on the weekend didn't pass, so it's still in the works. But they've got it kind of expedited to come up with something very quickly. So people are still bullish on that something's coming together, and the dollar continues to bleed out. So everyone was piling into the dollar, expecting higher prices or going here as the safe haven currency. Now that people feel like something's coming, everybody's moving out of the dollar and they're piling into the euro and the pound. Really, we're seeing almost all the other currencies really take off, and the dollar is doing the opposite. I posted an article a long time ago showing how almost every currency has been selling off for the last year other than the dollar, and now we're getting the flip. All the other currencies are rallying. Money's coming out of the dollar. And surprisingly, precious metals aren't rocketing higher, even though the dollar has really been selling off for 3 weeks straight. So it's kind of interesting that I think a lot of that safe haven money was also going into gold, and now it's rotating out of gold. So gold and the dollar are falling together because money is coming out of gold, going into their own home currencies. Let's take a look over at gold itself here. Here is gold, again, series of rally, consolidation, rally, a nice big consolidation. And if we look at the price action overall, we're looking for it to grind out, maybe put in a bottom and start to head higher going forward. It's still working through this big pattern. Overall, very bullish pattern. If we just go to the weekly chart, you can see a big rally, a bull flag, big rally, a high momentum bull flag where it just traded sideways a little bit at this resistance area and then busted through it. And now we're consolidating, pulling back. The weekly chart's actually showing some pretty big cycles. I generally don't look too much into the weekly cycle the way that I've got this set up. I don't focus on it too much, but it is still in a down trend. You can see we do have a little hiccup here, meaning there is some type of cycle moving up and price is holding, but gold does have the potential to continue to fade back down. There's no reason it needs to rally from here. The size of this move, we could very easily see this continue to work itself down. Everyone is bullish on metals, and you really have to go against the consensus of the market. And I know a lot of people don't like to think that, and whenever I say it, I get a lot of flack, but everyone is bullish on metals still, and they are trending lower, and the Brexit deal could continue to wind things down. We could see gold consolidate or trade sideways here for quite a while until potentially the weekly cycle actually puts in a bottom. We've seen a multi-month correction over here or pause. We could still see that come out for another month or so, and things to play out there. Let's go over to silver. Up 1.2% today. Silver's holding up fairly well. Again, it's in a series of bull flags, and this is a much larger bull flag. And if it starts to break this high, it could become fairly significant, but we do need to be aware silver and gold love to do this type of price action. I call it kind of like a hook play. More or less, the market comes down, you get this pivot high, it sells back down, and then the market kind of holds its ground, and then you see this kind of hook. It goes up, breaks a previous high, everyone gets excited, it kind of gets everyone hooked, and not only that, but it forms that hook shape, and then it sells off in craters. And silver could do the same thing again here. It's got to come up, made this high, and it's starting to come up, and it could pop, and you get this big short squeeze, and then suddenly it drops again and can go down. And silver and gold tend to do that quite often, especially when they're in a bear market. They do these really big hooks and get everyone caught off guard. Looking over at gold miners, GDXJ, again, big pullback consolidation. Still with a negative bias in the market overall and consolidating. We don't have an uptrend in place just yet. Looking over at natural gas, down 1 1/3 this morning. We did get long natural gas on Friday, so we'll be underwater today. We'll see if it can get some traction. Overall, it's trying to carve out this bottoming formation. Much like we saw over here, we move down, you get a hiccup, you get a sell-off, starts to build a base, and then finally we'll break out. And this is kind of that basing level. If we look over here, we've got similar price action, came down, had the hiccup, made a new low. It's forming this bull flag. We could continue to be under pressure for potentially this week, but we're going to have this You could argue a downward sloping, or we can go from the bar closes across here, but more or less we're looking for price to consolidate here, and hopefully we'll see a breakout and we'll start to see a big run going higher out of that base over the next week or two. Looking over at crude, down 0.4%. It's still forming what looks to be a big bear flag. Let's just zoom out a little bit. Overall, we've got this big move to the downside. It's consolidating with a bear flag just above this critical support zone right along the 51 area. If this starts to break down, it could get pretty ugly. 44 or 45 will be the next stop. So there's a pretty big potential downside drop. Our cycle is showing it's trying to carve a bottom out over the next week or two. So we'll see how things go. I'm not a huge fan of this price pattern, but obviously huge selling has came into play here. It is still more or less sloping down in the grand scheme of things and trading kind of sideways in this range. So we'll see how things go. Not a lot of insight in here. Overall, the cycle is pointing down for a couple days this week, so we could see this start to move down to the lower end. And if it does break this pattern, then this type of cycle lining up to the upside, that momentum actually shifts to the downside, and it gives you a very strong breakdown move because the cycle will flip. More or less, it's resetting itself. Instead of a top or a bottom here, it would flip and become a top, and that we would get that downward thrust. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.